Hello guys, this is
Hello.
This is In the Shares,
I'm Mr. Create.
I'm Mr. And.
and I'm Connect.
This is Create and Connect.
Yeah.
This is three
We're
of
trying
us
to create and connect to you. I guess.
connecting the dots.
Yeah. We've done the first video last week. How was it?
I was really nervous speaking English in front of native English
Speakers.
Yeah.
but I think I managed well.
Yeah,
well
I think
enough.
it's still understandable product for our
It
video.
wasn't so bad.
Yeah, it wasn't so bad. Well, no, we have our new member. He's actually been a member for years, but because of the personal issue,
occasional.
yeah, he wasn't able to attend last week.
Mhm.
So this week we are going to introduce a company called Appian,
Appian.
and we will be giving our presentation starting with business model.
Yes.
No. Well, these days, I mean, people really talk about the startups.
Yeah,
And but what if there's an owner and with a bright idea, but he doesn't know how to do the codings. And what if there's a company that lets you design, develop, and manage an application without coding?
I would love to use it
Yeah.
because I'm not a tech guy. I don't know how to code. I don't know how to program. But we have some ideas with us which we could not be able to actually execute it because of the technical
Issues.
difficulties.
financial issue. Yes.
And then financial. Most of it is financial.
Financial issue.
But
Yeah.
if there's some business models, something like that, I'll love to look into it.
So the Appian Corporation, or we'll just call it as Appian, and is the one we are looking for right now. Yeah. So basically, it's a platform company that streamlines organizations' workflow and efficiency by providing services of designing and creating and managing an application.
So it's not just a mobile, but
Also,
application in general.
web-based application and also mobile application.
Okay.
So you might wonder what is an application. Well, let's give it an example. So there's a bank, a commercial bank, and they really want to create a system that lets the bank create new accounts for enterprise clients. And there are many steps before creating this system. You need to think about the enterprise client's account opening application form and how to save it. Also, you need to verify the information and allocate those review process to various staff. And also, you need to think about the fraud detection because that new account could be involved in fraud, financial fraud. And also, and at the end, you need to think about the account opening approval process and also the allocation to staff in the bank.
So okay.
Yeah.
So basically, it's like the company is providing service in a way to make sure that all the workflows for the internal program can be operate efficiently. And I
Yes.
think that that's the function of Appian, that they're providing not only the consulting service. I guess I'm thinking that they're providing consulting services, but they're also making the program to work for individual clients, right? Every different client.
Yes.
So, okay.
So that's the concept of an application. So SaaS, software as a service, is a term where software licensing delivery model, where software is licensed on a subscription basis, and it is centrally hosted in a system called cloud computing. So there are many competitors in terms of SaaS market.
Specifically in the domain where Appian is operating.
Yes,
right?
such as Oracle, Microsoft, and SAP. But the opportunity or the what Appian could provide exclusively to their customers is that they could develop an application with zero or a little bit of coding, which means you could create an application using the drag and paste form, or just arrange the various steps of an application, just like a puzzle. Yeah.
So traditionally, we need to write down individual line of codes to create a program. But Appian is assisting their client by giving a visual tool to drag and drop and just make it very clear and intuitive.
Yes.
Yeah. So basically, like a zero code is like, even if you don't know anything about coding, you can still make a system work by just, like for us, I have no idea what the coding really is. But if there's a thing that I can just drag and just put it there, like if you see the picture on the left, there's a function and you want to add some function to that function, you can just always drag and just put it there.
Yes.
So it's basically that it allows a company or your client to basically work flow, like create the workflow without people who are involved with coding. So basically we don't have to hire people who know how to code. We can just outsource this part of the function.
Yes. So the Appian is classified as a leader in the low or zero code development market by the Gartner. Gartner is a consulting firm.
That's a big name.
It's a big name in IT world. They provide the IT consulting to various firms, and also they also provide a rank annually, or
yeah, it's annual. I think it's October or November they publish annually.
Yeah. So it's also it's a big name in IT, and Gartner has designated Appian as the leader in that area. So the business model for Appian can be classified into two ways. One is subscription fees, and the other one is professional services. And also subscription fees can be divided into two. One is providing SaaS subscriptions bundled with maintenance and support and hosting services. And the other one is the on-premises term license subscriptions bundled with maintenance and support. You might wonder what on-premises term might be. I mean, the first one, SaaS subscriptions, is the fee is based on monthly basis, whilst the on-premises term, the client will pay the fee to Appian on a project basis. Yes. The second professional services, the second model, is that Appian will provide consulting services, including application development and deployment assistance and training related to the platform, to their clients, and they will receive the fees from the clients. Yeah.
So just put it simply, I think it's really the revenue model has like two different things. Subscription, you're making something for a client, I guess, like any function or any application that they are in demand, and then you're providing also on-premise term, I think, which is like if the company or client is asking something additional, like can you build something more to this original function, then this Appian will be creating that part of the function and then give it and provide it to the clients. So basically, subscription fee is something that's ongoing. On-premises is just like one-off kind of project where you make money, but you don't make a whole lot of money because it's just one-off kind of thing. Professional services is where people have no idea what they are like how any application is being used or imagined, and Appian is just creating one full service by just providing that nature of the service.
So when I decide to create an application, then I'll be using professional services because I have zero knowledge of coding. So maybe I have to pay a little extra money for the service, but if they can do it for me, I'm definitely into it.
So business model for this company is basically making application or application for clients. So this is
this is the pricing, the policy of their of Appian. So they well, it's
Yeah, it's just
what
we
it is.
discovered.
I mean,
what it is.
So it's a flat fee, standard,
or-
enterprise. I think that's the
yeah.
professional service we discuss about.
Mm-hmm.
So yeah, this is business model and then price.
Mhm.
Yeah, it doesn't really. It's not that important. You gotta look at the revenue part.
Yes,
Okay. So the next part
it's
is
the market forecast. Yes, I'm referencing Gartner a lot in this report, and it's inevitable. It's Gartner who leads the IT sector and is more renowned name than us. So Gartner had forecast that IT services will grow by 4% in 2021, and as I highlighted, Appian will be included in IT sectors among overall IT.
Yes.
As you can see, 2020 growth rate is negative, which is inevitable as well, pandemic. 2021, Gartner is expecting to grow by 4.1%. Maybe it's a little happy case, but I think it's reasonable to see some growth compared to 2020. This is on about global mobile app revenue. As you can see, it's just keep increasing up until 2023. I don't have my glasses, so I can't really read it. But I see the growth rate is quite high, and the global mobile app revenue is keep increasing, which means the needs of developing the application will increase in accordance. And Gartner has specifically mentioned that by 2024, low-code application development will be responsible for more than 65% of application development activity, which Appian is belonging to. So by 2024, the market will grow so much. I would love to know the current portion of low-code application developments, but unfortunately, there's very limited information out there. I had a lot of hard time collecting the data, so for now, this is what we have. But as it says, very promising industry.
Well, I haven't done the research, this part of the research, but low coding is something that's a new idea. So I'm pretty sure
Yes.
when they say 65%, I'm thinking that it's it's dramatic growth from here till until 2024.
So why do people choose low code? First and most, they want to digitalize their business model, digital innovation. And by using application, they enhance the responsiveness of their business, which is quite reasonable. And third, but I think it's the most important for institutional players, to reduce dependency on tech professional, the fixed hire tech professional. What we learn from our work experience is that if someone quits, that becomes a huge threat to the company if there's no one else to alternative his role. If using low code, I think it's much easier, and I just realized I used my native language in the title. My
That's
apologies.
fine, that's
Yes, but I think it's very important to use the low code to, make it more accessible to the whole player.
Well, I don't want to demise the nature, the behavior of IT professionals, but usually when they're hired to a company, they kind of fall behind the current trend or new coding technology or techniques. So I'm pretty sure if Appian can provide something that's new and something that's efficient to the company, you don't have to hire tech professional who are they're so professional that you can't even replace them. And if they decide to move out of the company, it poses that much threat to the company. So I think we'll be moving into the trend of low coding because it reduces dependency, but as well as it's transforming the company's innovation to the responsiveness to their clients. I mean, if you imagine the 2022 quarter where every company has to go through something called digital transformation.
Yes.
And I'm pretty sure Appian could actually serve a lot of companies regarding the digital transformation.
And they have more knowledge of current trends,
Yeah.
so they will be more specific on how to do the business in the future. So low-code sectors, and currently the market is quite fragmented. It's not very consolidated. As of 2019, if you look at the left graph, the barometer of the current industry that Appian is in. So, which means there's a lot of competition, of course. But think about the other way. If you win the game, you will take the major role in that industry, and you will have much more to thrive and much more opportunities out there. And major sectors that the low-code application platform is working at is BSFI, the financial industry, and IT and telecom company. So combining the two is almost 50% of the market industry share. So people will love to see more fintech and more IT applications. So the market is quite promising. And this is low-code market forecast of the global size. And compared to 2020, in 2026, the growth will be by 3.5%, 3.5 multiple. And as you can see, there's no number. I had a hard time finding this data. So how I came up with the 3.5 multiple is I just took the 2020 bar. I used a ruler and just move it to the 2026, and it seems like 3 but not 4, so I decided 3.5.
It's somewhere between 3 to 4.
Yes. I'm very poor, so if you guys can subscribe and help us, we'll pay that money to make more quality of analysts.
Yeah.
And for continental breakdown, the regional breakdown, is that Asia market is very promising. And the next is North America and Europe, and the lastly South America, Africa and America. And that's because the infrastructure is not quite well spread it down there, but Asia is growing. Currently, the Appian is focusing more 70% of their revenue in North America, but they will eventually go global. And looking at the Asia market, there's a lot of potential. So, low code and Appian has a very bright future. I see.
Yep. Well, to kind of summarize, first 18 minutes worth of presentation is that the because of the digital transformation, because of the new business growth, a lot of people want to create something new, like some new application or companies, and Appian can certainly help with regards to something that we've never people are not aware of, like people don't really know how to code. But if Appian can provide that kind of services, I think it's, and not only that, there's not really a dominant player in this market. So Appian, if this company can be number one in this sector, I think, then certainly this company is worth looking at in terms of your investment decision. So let's move on to the Appian's financial. I've actually read, well, not meticulously, but I've read 2020 third quarter 10K summary, the audit report summary, and I'll be going through something that's important or summarize it. The track record of the company, this company was founded in 1999. It's been, I guess, almost 20 years since the foundation. Market capitalization as of 2020, November 13th, is 6.94 billion, which is kind of small company, small to mid-sized company. Business model, as we explained it enough, low coding platform company. The headquarters, they're expanding to diverse countries: United States, Canada, Switzerland, UK, France, Germany, Netherlands, Italy, Australia, Spain, Singapore, and Sweden. And you can see that they are, because they're expanding, there's leasing costs is also expanding. It kind of correlates to the income statement of the company. This company went IPO on 2017 May. IPO price at the $15. It's currently $99. It's almost close to $100. So within 3 years, this company went 6 times. The company type is obviously software as a service. And 2020 third quarter revenue, 12 trailing months, is 291 million, which makes it price PSR at the 23 multiple as of 2020 November 13th. So I think it's quite high in terms of the nature of the company being tech company. So I'd be cautious of making or purchasing the equity. Financial overall sourced by Bloomberg. As I said, that the stock price is currently $99. I think there's been an earnings surprise.
Skyrocketing.
Yeah, skyrocket. It's something that you should be investing in. If you know that the company will be going up. The income statement wise, the revenue for the third quarter was 77 million. Balance sheet, it seems like the total liability, debt to asset is like 12.4%. Total assets, it's around 492 million. Total liability is like almost half of that, but I will explain it further down the road. This company does not have that much debt. So yeah, so I'll be moving on to their income statement or
Fine.
yeah. Stock movement, as you can see, this during the pandemic it went down a lot, and then it recovered to almost $100.
At the very end, this very sharp increase in their stock price. Maybe that's correlated to earnings surprise.
Yeah, I think that there's been earnings surprise for this company, and partly because people are thinking, we're done with pandemic, but this company has really nothing to do with pandemic.
Yes.
Pandemic, I think.
It's a very low debt ratio.
So this is the balance sheet asset part. As you can see, they have a lot of cash or cash equivalents. I think they're making repo, which is like has no risk to it. Basically, they have a lot of cash, and the cash is coming from the IPO proceed. They almost issue new shares almost every year since 2017, 18, 19, 20. They issued new shares, and proceed of that IPO initial the stock share offering is really seated in their bank account for cash and cash equivalent. So I think it'll be utilized in M&A sector as well as the expansion of their headquarters. I think. I'm just expecting. So if you look at total assets, it's almost $592 million, and I think 70% or majority portion of the asset is the cash basically. So they
If they raise the money through the capital market, it's quite surprised to see they're stacking the money into the cash account rather than actually spending. So I guess they had their own business plan, which they have not yet executed.
yeah
So we would love to see how are they planning to use their sources.
yeah. So if you can see the goodwill part, they've done their M&A as well. From 2019, they have no goodwill, but then 2020 they actually acquired a company, I guess. So yeah, that's pretty much it. This company is tech company. There's nothing like property equipment. It's just computers, and yeah, basically this company has a whole bunch of cash as for now. Their debt and equity part, as you can see, they have when I said they have not much debt. If you look at the current liability, or this is debt that you should be aware of, and mostly there's something called deferred revenue, which accounts for almost 80%, I think, or 90% of the current liability. And this part is basically that this company receive money or subscription fee from their clients, and it's something that they have to execute in terms of their service. They've received money, but then you have still duty to supply your service to your clients. So as long as this company provide what was due to their clients, there's no risk for this company to go bankrupt because the current liability, they have no other debt than the current liability. If you look at the long-term liability as well, there's the major portion of that is operating lease liabilities. So as I said, they're operating in so many different countries, and I'm thinking that they've signed the long-term lease contract. So it's part of their liabilities. So in a way, there's I read it in the 10K report where they have a line of credit of up to like 20 million, but that's not a whole lot, but they're not using it as well. So as of about third quarter 2020, there's not much debt for this company. So if you're worried that this company can go bankrupt, I wouldn't worry about it that much. This is income statement. As Mr. N stated, subscription fees and professional services are the two major factors to the revenue. Higher portion of that is subscription fee based revenue, as you are aware of that this company is software as a service, and their gross margin is quite high, like almost like 70% ish. So, and they are currently not making net income. They're currently at the state of net loss. This is what usually most tech companies are. I'm pretty sure they will, but something that you should be looking at is that they are making a whole lot of money, and their revenue is increasing from 2019 to 2020. So this is one a major portion of income statement that investors are looking at. How fast are they growing?
And actually, the net loss is decreasing
Yeah.
by very much. So I think they are looking ahead a net plus.
In a foreseeable future.
Yes, hopefully.
I
And,
think it would take 4 years.
yeah. But the portion is getting very
Yeah.
decreased by a big portion. So
Which is significant in
yes,
terms
I
of
think
if this
very-
company is making more losses, you shouldn't be investing because
yes.
basically they didn't borrow money, they're using your money or equity investors' money for expansion of their business. So if they're making more losses every quarter, then you should think about
No, it's very good point.
yeah. So you should think about that. Summary part, I read it. You don't have to read it, I guess. 17% to 20% of total revenue is coming from U.S. government, which adds to the stability of the revenue sources. 30% of total revenue is coming outside of the United States, which makes it 70% being from United States. So you got to do the math. I guess the almost half or 40% of the domestic sale, U.S. sale, is coming from the government sources.
Yes.
So you don't have to worry that much about, which makes it also the client pool. They are very diverse in terms of their client pool. They're providing service to not only government related entities, but they're also providing services to NGO and different like energy sector, IT sector. So their client is very diverse, and I'm thinking that if they can increase their sales from outside of the country, I think it's still the opportunity for this company to increase their revenue.
And also, I'm kind of thinking that because of the presidential election, the government part of revenue might get affected, but I don't think that's going to be a major part. But that may be something that you should consider when investing in this company.
Yeah. The government doesn't really hire coding personnel, I think. It's just my guess. And so I wouldn't comment on anything other than my guess. Their term license is mostly 1-year contract. Basically, the subscription fees, it's basically, it used to be they said 3-year or 5-year, but it's now 1 year. So every year, the clients get to decide whether they want to renew their service. I'm pretty sure they have to, basically. They're the one who created the service for them. So professional service is another part where it's standalone project. It's either fixed cost basis or charge hourly basis. So this is sort of something that's added to the subscription fee revenue part. M&A, as for M&A, they've done 1 M&A for this year, I think. I don't know how to read this. Novaya solution at the 6.9 million, which isn't that much, considering that they have almost $300 million worth of cash. So I didn't really look into what company this is because it's only 6 million compared to what they have in terms of their cash. There's not a legal issue or any lawsuit issues you should worry about. They're working. This is something that was very interesting to me. They're working strategically with the accounting firms to increase their professional service revenue. So I think that my guess is that there are a lot of companies that would like to get the service in terms of their structural change or let's say digital transformation. They will be probably walking into one of the accounting firms, let's say Deloitte, and I'm pretty sure Deloitte doesn't have any idea. Well, they have some idea, but they have no professional who can make the application or what you call it programs. Because that's not their specialty. So this company is, I think, working with the 4 accounting companies for the consulting as well for the professional service. So 2020 third quarter revenue has increased 6.9% compared to the previous year, and their subscription fee-based revenue has increased while professional service revenue has decreased. And it's, I think, because of the pandemic. There are less people who are investing in application anymore. For a major increase of revenue is coming from subscription revenue from original clients, not from the new clients. So I guess from the statement, I can guess that the current the original clients are increasing their subscription fee by demanding more services from Appian. I think that's how I interpreted this part of the.
One thing I want to mention is that there's what is called locked-in effect.
Yeah.
And I think it's very important for subscription business model that once you make them use their model, the clients will have hard time moving away from them because the Appian is the one who developed it and they have most knowledge into this program. So if you want to take it to the other business enterprise, it would be hard. So you have to keep using their subscription model, which is in line with increasing in subscription revenue. And as create,
Connect,
Mr.
connect,
Connect.
Mr. Connect mentioned. Because of the pandemic, the new business start will decrease, which is correlated to professional service decrease. But still, you have to use their, work with them.
So it seems that Appian knows how to retain their client, existing clients.
I'm gonna finish it real quick. Subscription revenue gross margin is 98%. The revenue is increasing, therefore the marketing expense and R&D expense also both have increased. I'm pretty sure this is the company's decision. They want to expand the scope of their clients based on increasing revenue. Their general expense is also increasing due to mostly from employees that are being hired. So this company is increasing in terms of their size of the employees. IPO status, they went public in 2017. As you can see, they raised 77 million. In 2018, they also added new shares at 57 million. 2019, 101 million. 2020, 107 million.
Wow.
So they've raised total of 334 million so far. So this is why they don't have debt.
Yes, but it's surprised how they were able to actually raise that money from the capital market, not borrowing from someone, but from equity.
Well, I guess if I were a lender, I don't think I'll be borrowing money or lending money to this company.
Especially during the pandemic.
Yeah, just for now, I guess this company is very small. They don't, like proper. They don't have like buildings or properties where they can just, so they have virtually nothing that's virtual. It's
All
just,
they had is like manpower and technology.
Yeah. So it's hard for them to, I guess, borrow money from companies. But yeah, naturally, this is why they added new shares every year. So they are using IPO proceed for the M&A, but mostly I think the expansion of business revenue. They're expanding to different countries, and they will need a lot of money for leasing fees and employees and whatnot. So I'm hoping that they are using the M&A proceed in a profitable way for equity investors. This is the stock ratings by Wall Street. It's mostly holding position, but if you look at the average target price is $79.
Wow,
So
much below than current price level.
yeah, I guess either they didn't expected the earnings surprise, but still 99 seems to be very high. I would like to. I recommend you to be very cautious if you're thinking about making an investment. I'm pretty sure volatile market will be coming, towards the end of the year, so you can then buy, I guess, something that's lower than, I guess, 80 or at least 80, I think. So yeah, that's just my personal opinion. You gotta do your studies, obviously. So this is the end of our presentation.
Wow.
It's 30 minutes.
I mean, if we speak in English, it's more energy costing and
Intensive.
yes, I'm quite
Nervous.
nervous. Yes.
I'm hungry right now.
Yes, let's get a pizza after work. I mean, he's on his diet to be healthy, and so we ate salad for lunch,
Yeah.
and I'm already hungry. Yes.
Yeah, but I would love you to intent of this video is not to bore you or with so many ideas and data. I think if you're making an investment and if you can just take a look at our video for I guess 30 minutes, it will give you some insight. It will give you insight in terms of their business model, in terms of their the market outlook within their business model, and the financials. This is something that you don't want to read but still need to read. So if you read it in Yahoo Finance or any other platform for their debt ratio, it looks very high. But if you actually look into it, it's not. They don't have debt in terms of their with the potential possibility of bankruptcy. They didn't borrow money from bank. So this is something that we are trying to contribute to your finance independence, retire early. So yeah, please do subscribe. We'll be providing quality.
And also please click likes if you really liked it.
And what we really want to emphasize is that if you have interesting idea, if you have more knowledge into this topic, or if you want to discuss something like Unity or edge computing, which we will be covering and which we covered, please contact us and we'll give you generous amounts of fee for interview. So don't worry about it. We will make sure you're anonymous. So just contact us for any business idea, investing idea.
Yeah, Mr. Creed has mentioned, just as he mentioned, We want to provide insight with you by sharing your expertise in your field. So if you're familiar with Appian, or if you're working with Appian, or working
For the Appian.
for Appian, I think it would be very dangerous. But anyways, if you're really familiar with this business model, with this company, please send us email or leave comment, and we'd like to give you an interview. And based on that interview video, we'd like to provide it to our clients or our subscribers.
Okay.
So yeah, that'll be it for this week.
Yes, let's get a beer.
Let's get a beer.
Cheers.
Cheers.